Jenny Turner with Lovejoy Real Estate. I'm so excited this morning to have a conversation with Rebecca Oleary of Kerr Matthews, and we're going to talk all things commercial real estate. And I will tell you, I've been doing residential real estate for a long time, but besides the fact that we own this building, I don't know anything about commercial. So I'm really excited to ask you some questions.
I'm Rebecca Oleary with Kerr Matthews. I'm a commercial real estate broker. I started off in commercial real estate appraisal. I did that for 12 years. I was an MAI, and when I decided that I wanted to transition into brokerage, I got my real estate license, and I've been doing that since 2015.
Awesome. Why did you choose commercial real estate instead of residential real estate when you made that transition out of appraisal?
It's all I knew. I didn't have any experience in residential real estate. And the skill set that you get by being a commercial real estate appraiser and taking all the courses required to do that and to get the MAI designation, it's a really long road. They kind of consider it the equivalent of a master's degree for that industry. So that skill set is fairly unique, and it applies really great to being a commercial real estate broker.
Why? How does it make you a better commercial broker?
It's like, it's having a lot more education than the commercial real estate broker next door, right? So there's another organization that I'm involved with now, which is CCIM, and that's kind of the broker equivalent of the MAI, and okay. they have a complimentary membership, so it was easier for me to get my CCIM with my MAI designation. But I think it's important, especially as a woman in a very male-dominated industry, to set yourself apart and know your stuff.
Yep, makes sense.
Yeah. So
that's partially why I don't do commercial real estate, right? Because legally I could. My license allows me to, but I don't understand it. And I don't understand the different property types. I don't understand the different financing types. And I get houses. I understand houses. I understand the residential side. And I do fine even up into the smaller multifamily, right? That's no problem, even 5, 8, 20.
Especially with your experience.
It's just, those are just houses. But once you get to let's sell a Walgreens or a Starbucks, I don't understand it.
Both tenants have had troubles in the last few years, by the way, so the cap rates on those are going up.
So let's start there. Cap rate, what is that? How does that matter? What are people looking for?
Sure. So it can be easy to figure out or complicated to figure out. It's the net operating income before debt service divided by the price.
Okay.
So let's say your net operating income for a property is $200,000 a year. After all your expenses, your cap rate is 6%. So your price, the value of the property would be
problem.
Yeah, it's very simple. But if you're analyzing an apartment complex, it can be quite complicated to forecast accurately the operating expenses for so many different expenses, especially if it's a large complex, right?
Yep.
If it's a single tenant retail building like a Walgreens or a Starbucks, those lease structures tend to have the tenant responsible for all of the property expenses most of the time. So that's very easy to determine your NOI. Sometimes your NOI is your rent payment, and that's it. And so
because the tenant takes responsibility for everything else.
Yep. So it's a direct pass through, and you don't have to worry about it.
Yeah. I mean, as a landlord, it's hard to track that stuff.
Mm-hmm.
It's hard to be accurate all the time, right? Mm-hmm. And I'm just a baby landlord, but it's hard to know exactly all the expenses and all the things.
The majority of my clients that own a significant real estate portfolio hire professional property managers. They usually charge 5% of the gross income to manage a property per year. And that makes their lives a lot easier for tax purposes and just for, they don't want to get calls in the middle of the night because a water pipe broke or something in a store. It just depends on the investor.
Right.
Local family ownership entities will manage themselves, for example, or some of the legacy commercial real estate ownership groups in the area, they have on staff property managers and asset managers.
If you were to get started in commercial real estate and you were looking to diversify, what does that look like?
As an investor?
Yeah, as an investor.
Mm-hmm.
And is that can you be a small family entity as an investor, or is it really just all big corporations? Is it something that people should look at?
It can absolutely run the gamut. You can absolutely be a small family investment group, or you can be a single person and you partner up with someone else. I think a lot of my clients have built generational wealth over their lifetime by starting in a smaller multifamily development or property. Maybe doing some renovations.
So a lot of your clients get started with a smaller multifamily property. What does that look like? Like, what does that mean?
Let's say you hire a commercial real estate broker to help you buy a 5-plex. Commercial properties are anything above 4 units.
Right.
So 1 to 4, they'd call you. 5 and over, they'd call a commercial agent to get some information and to get accurate underwriting and connect them with potential lenders and talk to them about a lot of the moving parts that you wouldn't just know automatically.
Yeah.
So the clients that have built generational wealth over their lifetimes tended to start with a smaller apartment complex because it's more affordable, sell it and 1031 exchange into a larger property after they've built up some equity there.
Yep.
Do that over and over again until all of a sudden they own 180 units.
Right.
Now they're at the end of their active working life season and they're ready to sit back, play with the grandkids, retire. And that's a lot of time when you will find more passive investors. They're sick of owning multi-tenant properties.
Yep.
And so they will 1031 exchange out of those properties and buy most of the time more than one retail properties with 1 to 5 tenants.
And those properties are more passive. They're easier to manage.
They're much more passive because of that lease structure we were talking about. The triple net lease structure is how the majority of retail leases are structured.
Got it.
Office has historically been structured with a full service gross lease structure where the landlord is responsible for all of the expenses except for their own in-unit janitorial. But that segment has really also moved more towards triple net. And I think that's a combination of they don't have to pay their leasing brokers as much commission because the commission is based on the aggregate rents.
Yep.
Combined with they can't control a lot of these operating expenses as much as they used to because the price of utilities and property insurance and property taxes have gone up so significantly that they need to pass it on to the tenants, or it starts to look, it's harder to forecast their NOI into the future, into a 10-year hold period if your expenses are so unpredictable.
When we bought this building, the tenants that were in here were on a triple net lease.
Mm-hmm.
And as a smaller landlord who does self-manage, it was too hard. I couldn't do it. I couldn't figure out what percentage and what were all the expenses and how were they fair to break up. And so when I re-rented my units, I've actually gone away from a triple net lease. And it is more of they pay their own utilities and all utilities are separate. But they aren't paying a portion of the property taxes and they're not paying a portion of the landscaping. That's just all included because it was easier for me to manage that. And maybe that just comes from managing residential and understanding.
I mean, it makes total sense, right? Because you just added those expenses effectively to their triple net equivalent rental rate. So you're still recapturing them. And your tenants probably aren't on 10-year leases, right?
Yeah.
They're shorter term. So when it comes time for renewal, you can renegotiate the rate or, look at your expenses again and make sure, is this still market?
But in the commercial world, it is more common to have longer term leases, right? Like 10-year leases are normal.
It is. Think about how much it costs to build out space, especially for a larger commercial tenant. A lot of times landlords are required to offer a tenant improvement package to the tenant in order to incentivize them to move into the suite. Typically, it also includes a few months of free rent, typically 1 month per year of the lease term.
Interesting. Okay.
Mm-hmm. And so if a landlord is going to invest so much in a tenant and into their interior build out that may or may not work for the next tenant,
right,
you've got to have the length.
Does a tenant always take those expenses on? Like, is the tenant always the one building it out, or the landlord pays to build it out?
It depends. Usually it's a combination of both. The tenant is expected to come up with some of the funds and the landlord provides them with cash to do the rest, or depending on who their landlord is, not a discount, the landlord might hire the GC and get it all done for them. It just depends on how the lease is structured and what the agreement is and whether the landlord is able and capable to do that, or if the tenant is able and capable to do that.
Right. So it really just depends on the situation.
It does.
Got it. Can you walk us through the main categories of commercial real estate? I know retail, industrial, but what does that mean? And what are all the categories?
Sure. Well, I built my brokerage business kind of focusing on retail properties. So that's anywhere you shop, right? Today that can include, vacant Big Lots stores or, Walgreens, shopping centers. Doesn't have to be big to be commercial or retail. And those two words are kind of interchangeable too, retail and commercial.
Okay.
And kind of excludes industrial and office, depending on who you're talking to, and multifamily, but it's just, jargon.
Yep.
Industrial is anything that's a warehouse, right? You've got office properties. We all know what office is. This is an office building, right?
Yep.
Then you've got something that's in the middle of those two called a flex property, and that's heavy office build out in an industrial building. It's typically in the form of business parks. Think like a Hillsboro, Silicon Forest, where you've got a lot of business parks that were built for Nike and Intel. They need R&D space, but they also have a lot of people that need to go into the office and work. So it's heavily built out with office, a smaller warehouse area, usually smaller units.
Yep.
And so that's flex. You've got within office, you also have medical office. That's a completely separate segment. And then you've got multifamily, which is like we talked about, 5 units plus.
Yep.
There's also brokers that specialize strictly in land development. So land brokers. And those are typically more in tertiary markets, in rural areas.
Right.
You've also got people that focus on RV and manufactured home parks. You've got fuel station brokers.
So niche-y.
It is so niche-y. I don't think it's necessary to be that niche. I know that is a controversial topic in the industry because a lot of the large institutional brokerage houses like CBRE and JLL, they really want the brokers to specialize. Stay in your own lane.
Yep.
Don't call this other broker's client, but especially with a background in appraisal, having been exposed to so many different property types in my past, I've seen it all. So maybe I don't know what, operating expenses are for a 50-unit apartment complex right now, but it's very easy to figure out. Right. I can find that out. So it's kind of more about who you make your relationships with, but in a smaller market, it's easier to do a little bit of everything.
Right.
Yeah.
And I know that the commercial world doesn't have the same like MLS data. You don't have the Zillow for commercial property.
Right.
So if a buyer's out there thinking about getting into this, how do they start?
Sure.
What kind of questions should they ask, or who should they talk to, or how could they find what's for sale?
Yeah. Well, I will say that most people are aware of LoopNet.com, which is owned by CoStar. Only about 40% of the properties that are on CoStar are on LoopNet. CoStar is very expensive. Okay. Typically, only professionals have access to it. Was talking to someone yesterday that pays for their own individual CoStar subscription, and it's $550 a month.
Okay. So most people don't choose to do that, right?
Yeah. There is another platform that has come out in the last few years called Crexi.com, and that's where a lot of buyers go. You can filter it. It's free.
Crex?
Crexi.com. And so what I would propose is look around, play around with it. Most of the times brokers will put a very detailed offering memorandum within their listing. So you can read through it and start to kind of see what the jargon is and what they're reporting to you, cap rate, price per square foot, the tenants.
Right.
But it can get complicated very quickly, and that's where a good advisor comes in.
Right. And that's you need an expert to help answer the questions. If I wanted to get started, $100,000, $200,000, just what kind of what would you say?
It depends on who you are, right?
Fair.
Okay, so if I just want to invest in a passive commercial property and keep my day job and have this because I've got some wealth sitting aside that I want to diversify my portfolio with. I already own stocks and bonds. I've got some crypto over here, and I'm ready to jump into commercial real estate. It's fairly difficult to find an investment property that is commercial, whether it be office, industrial, resident, or retail. It's a little bit easier if it's residential because you can buy fewer units.
Yep.
Under $1 million.
Okay.
So commercial lenders are typically going to require 30 to 40% down.
So $300,000 or $400,000 down minimum, most likely.
Yeah.
Unless someone's going to own or occupy the space or use the space for their own. And then you're in the world of SBA where it can be 10% down.
Right. And so in order to qualify for a small business administration loan, you need to occupy at least 51% of the building.
That's what we did. But I had to reconfigure inside a little bit and make one of my tenants have a little bit less space so that I could prove that I had 51%.
Yeah.
Because the building was actually 50-50.
I remember when I was an appraiser and I would do appraisals for SBA lenders, and they were like, are you sure that this is the right square footage for this space? And it's not just 2 square feet more. I'm like, oh, I mismeasured it. It is actually 2. Just kidding.
Because they care about that 51%.
Because otherwise you can't qualify. So the SBA has a lot of really great programs out there. They tend to do a longer amortization period. Commercial loans typically are 15 to 25-year amortization periods with a balloon payment due in 10 years. So sometime within the first 10 years, you're going to need to refinance.
Right.
SBA loans are longer terms, longer amortization periods. And some of the local lenders I've been talking to will automatically reset your interest rate if it goes down at least once. Mm-hmm.
That's great.
Yeah, Jessica Beck with Wells Fargo does that, and On Point Credit Union also has that program.
That's really cool.
Yeah.
Because rates are high right now, right?
Mm-hmm.
And
nobody really knows what they're going to do.
Right.
I mean, we all guess.
Right. And I've been wrong every single month so far.
Yeah.
So I don't know.
Right. I know.
Are commercial interest rates, are they about the same as residential real estate? I mean, we're sitting 6 to 6.5, 6.5, plus or minus, plus or minus. Is that about what you're seeing in the commercial side too right now?
I get asked that question quite a bit. And it's easy to say yes, 6 to 6.5, but it is way more dependent on the strength of the borrower and the program that they want. So let's say, for example, I've got very good clients, a married couple. They've got an extensive commercial real estate portfolio. They have excellent credit. She's very savvy. She used to be in commercial banking. And they can obtain financing today in the low 5s.
Okay.
Maybe high 4s even, depending on the terms, right? It could be variable interest rate, but it's starting there because they're so well qualified. On the flip side, and depending on the property as well and the length of these tenant leases.
Right, because the property matters.
It's the collateral for the loan, unless it's a recourse loan, in which it would also include the personal guarantee, right? Of course. It's a lot easier to finance a single tenant retail property with a 10-year lease versus a single tenant retail property with a 3-year lease.
Right.
Those are almost not financeable.
Interesting. So as I think about it from a business, building owner, I should have longer leases to make my property more valuable.
If you plan on selling.
Which I don't, but...
Yeah, right.
Who knows?
If you do, but there's a flip side to that too. We've got a shopping center in contract right now. It's a fairly sizable shopping center. And right before they put it on the market to sell it, they rewrote all the leases. They extended them, which is normally great, but they aren't very sophisticated investors because they don't own this property for decades in the family. They signed all the tenants up at below market rent without escalations, and they're full service gross leases and not triple net leases.
So their expenses are going to continue to go up and they can't raise the rents.
That's right. So if you're going to invest in that shopping center, you got to be ready to play the long game. Eventually it will be worth a lot more. It's got a lot of upside, but are you in it for 10 years? And so that's kind of the difference in how these really affect value.
Are most of your investors in it? What is the term that people look at?
Sure. Here's an interesting anecdote for that. The downtown Portland office market has been hit hard. It's got a 30% vacancy rate, of course. The institutional investors buy and trade real estate. That's what they do. They're looking for quick appreciation. It's going to take longer than 3 to 5 years for these assets with such high vacancy to appreciate significantly.
Yep.
So they're not really in the market to buy these assets right now. But you've got generational legacy commercial real estate investor groups that are in it for the long term. They want to be in their in their town and help make it a better place. And they're willing to put in the money and the time to play the long game.
So like a 10-year or 15-year, or do you think even longer?
It could very well be longer than that.
Okay.
Like when I was an appraiser, the typical investor holding period is 10 years. So if you're doing a discounted cash flow, trying to project net operating income for a property like a shopping center, for example, with a lot of different tenants, you would do a 10-year cash flow.
Okay.
And then account for the time value of money, discount it all back to a present value.
Right. So speaking about Portland specifically,
Okay.
I know the Big Pink just sold.
Mm-hmm.
And will you remind us what it sold for this time and what it sold for last time? About?
Mm-hmm.
Do you need to look that up first?
I believe it sold for $275 million a few years ago, and it was recently purchased for $75 million.
So a massive discount.
Massive.
And that is a local
investor,
right? Who is in it for the long game and has said on news stories that he's part of his goal was helping Portland.
Right.
And what does filling those buildings look like today? Like, what is he doing, or what are the brokers who are tasked with that? What are they doing to fill the space?
Well, I'll tell you this. They're spending a lot of time figuring that out, and they're being very intentional about it. It's going to take a rebranding of the asset. They want to make it a place where you live, eat, work. Okay. Kind of a mini city within a property or a block within the city.
Okay.
Downtown Portland can change block by block, right? The desirability of the real estate can change very quickly depending on where you are. So they're going to try to create a place where you can go, you feel safe, you bring your kids, you can go to work, you can use, maybe they're going to have conference rooms that are on every floor as opposed to one on, the fifth floor that you have to take an elevator to.
Yeah.
And just really work with the tenants and give them a lot of incentives to get some warm bodies in there and create the momentum.
Yeah.
I'm going to host a CCIM, we'll have a lunch and learn walkthrough on one of the vacant downtown office buildings in the near future to get brokers in the building so they can see it and they can hear the story
about it.
Yeah. Yep. It's all about getting out the word out there, but to a lot of businesses too. But here's some good news. I just heard that there is a 200,000 square foot tenant that is coming into our market, into the city of Portland. I don't know who it is. It's confidential, but that's significant.
Yeah, that's
besides government, that's might be the biggest office tenant out there.
Got it. So there is positive growth and positive momentum that way.
Yes. Yeah. Combined with a lot of bad news too.
So let's talk retail for a second. Stores.
Sure.
That's
also had its challenging issues in the downtown core, hasn't it? A lot of the retailers have left to go out into the suburbs. The Beaverton.
REI and the Pearl, right? They closed.
Absolutely. That's going to be a very lovely car dealership.
I saw that.
Yeah. Yeah.
I don't know. It's an interesting place for a car dealer.
Absolutely.
But Porsche Studios right across the street from that.
Yeah.
So maybe that's a new little pocket.
Yep. But retail's not healthy everywhere. And in a lot of tertiary markets, we've seen it repurposed to medical office, for example, given the growing demand for medical office. Medical office, I would say, is one of the safest segments to be an investor in.
Interesting.
Because of our aging population, right? Yep. And the needs that are out there. Smaller multi-tenant retail is also considered fairly stable. It depends. It all depends on location and the quality of the building. But some people don't like to invest in multi-tenant retail properties because they don't want the hassle, or they don't know how to deal with multiple tenants, or they don't want to. Other people won't invest in single tenant retail because if that tenant leaves, you got all your eggs in one basket. And
that is why I wanted multi-tenant.
Absolutely.
I did not want to be the only tenant in my building. I wanted to have other people helping me my mortgage.
I think that's why a lot of the investors of the single tenant passive properties are people that could afford to deal with a vacant building if it came to that.
For a long time.
potentially.
Because it can take a long time, right?
It could take a long time. Yep. Or it could be very costly if you had to give them a lot of TI build out, because it's probably not going to be the same. It's not going to be the same tenant, right? So like Beaverton, for example, retail market's pretty hot. I mean, there's quite a bit of demand for it. In the Pacific Northwest in general, they don't trade very often. You know, people hang on to their properties, especially when interest rates are low. I mean, people are always trying to buy, and that's when we get investors coming in from Washington and California, because our cap rates tend to be a little higher, which means your returns are a little greater.
Yeah.
But when interest rates are high, one of the main drivers for people selling assets that they would otherwise hold is their loan is coming due. That balloon payment's coming up. So they can either refinance
At a higher rate.
and potentially not cash flow, or sell it and maybe 1031 exchange into something else, or just bite the bullet and pay the taxes.
So let's talk 1031 for a minute. For people who don't understand what that is, it's a tax tool, the tax way to defer your taxes. But can you explain it to us a little bit more detail?
Sure, I'll give you the 30-second elevator speech on it. Let's say I own a piece of commercial property that I bought in 1972. And I've been enjoying it, collecting the rents, and it's been appreciating. And now I want to sell it because I got a great offer. And so I'm going to have to pay capital gains taxes on the difference effectively. I mean, it's more complicated than this, but what I paid for it compared to how much I sell it for now. There's a tool where I can take the full amount, and if I sell that property and buy another property, I can transfer that equity into the new property without paying the capital gains tax. Now, eventually, you have to pay the tax.
Or you die.
Or you die, and it goes to your children. And when you do pass away, your basis gets reset. So I have a good client who, and here's another interesting thing. You know, typically you're going to be told to get an appraisal at date of death. Let's say your spouse passes away, and that's the safest way that you can protect yourself from getting in trouble with the IRS, to reset your basis.
Right.
A lot of times people don't, and they'll just ask their broker to prepare a broker opinion of value, which isn't USPAP compliant. I think the general rule of thumb is if it's valued over $1 million, you should invest in getting a commercial real estate appraisal. It's worth it. I think it's worth it to stay out of, stay on good terms with the IRS anyway, no matter what. But that's pretty much it. You have 45 days to identify up to 3 properties after it's called the down leg, is the property that you sell. So then I've got 45 days to identify 3 properties that I might buy. I might buy one of them. Hopefully I buy one of them.
Yep.
And I have 6 months from the date that I sold my down leg to close on my up leg, to close the sale.
And commercial takes longer to close, right?
It sure does, yes, especially if you're getting financing. If you don't buy one of those 3 properties, your funds have to stay in the exchange account for that 180 days. So you don't get your money back until the end of that period. So if you're going to do a 1031 exchange, I would recommend getting in touch with an exchange accommodator quickly.
Yeah.
Don't wait until the last minute. There are a lot of good accommodators out there, though, that can get everything together and make it happen quickly, but it's a lot easier for everybody if you don't do that.
Yep.
And for your broker to do that too, but you get to choose up to 3 because things can come up that you're not prepared for.
Yeah.
And you might find out that, a property's got cracks, in the bricks, or the foundation is crumbling away, or whatever it is, or the seller is misrepresenting the financials, and you need to not go forward with that transaction. So a lot of times people will put more than one property in contract, or at least carry that conversation with the listing broker. Like, okay, we are interested. Let me know if you get another offer,
While they're doing research on another property.
Yeah.
What is your favorite property you've sold?
My favorite property that I've sold, I would have to say it is the Sunset Oaks Shopping Center. It's in Hillsboro, off Baseline. It is a multi-tenant retail and medical office complex with 2 significant medical tenants, coffee shop, sushi restaurant, and a pharmacy.
Okay.
And it was also my highest asset value transaction.
So what did it sell for?
$11.8 million.
Okay.
I just recently looked at it again, and I think it's worth significantly more than that now. It was probably 2020, maybe 2019 probably when it transacted last time.
Okay.
So it's really
So
appreciated.
that I was going to say that investor is happy with their investment.
That one was fun because we renegotiated a lease in contract, and like while we were in sale contract with one of the significant tenants, and because the buyer is so sophisticated and savvy that he came up with a lot of issues. So I learned a lot.
I mean, that's one of the fun things about our jobs, right? Is we get to learn as we go through it too.
Yeah. And today is their favorite asset that they own, and it's been their best purchase. So happy clients.
Right?
Yeah.
All good.
Yeah.
I think that's awesome.
Thank you so much for having me in and talking. That was fun.
Thank you. Thank you for joining us for this conversation on commercial real estate. If you liked this topic, please drop a note below. If there's something else you want me to dig deeper in, let me know as well.